Hello, welcome. My name is Pete Calabrese. I am CEO of CanAm Investor Services as well as CanAm Capital Management. Pleased to be joined today with my good friends and colleagues, Mr. John Reid, the head of investment origination, as well as Matt Stummer, our senior vice president. Matt, John, welcome.
Thanks, Pete. Good to be here.
Yeah, likewise.
So it's great to have you guys. And our conversation topic today, as everyone who has clicked onto this knows, is the redeployment of funds for someone's investment in the EB5 investment vehicle. So we're going to talk to you guys about a few of the big components that go through our redeployment, as well as how we approach redeployment, how we structure our projects, and what this would ultimately mean for you as you are making an investment, or if you've already made an investment with us. So in order to talk about our platform, I think it's helpful to talk about the reasoning why redeployment of funds is required. And really, ultimately, the reason for redeployment is because an EB5 investment is an at-risk investment. And that at-risk investment needs to, in order to meet the criteria for the EB5 program, be maintained at risk throughout the sustainment period. So the sustainment period is something that has had different interpretations for pre-RIA investors, post-RIA investors, but it is the time frame that your funds need to be at risk. And whenever we are putting together redeployment options for our investors, we are always sure to comply with the most up-to-date guidance on the sustainment period. So the redeployment of funds allows for investors to ensure that they maintain their eligibility going towards their I-2-9 petition, going towards their eventual permanent residency, and make sure that you are able to continue moving towards that ultimate goal of your EB5 investment, which is to get your full immigration status and your repayment of funds. So some of the requirements for a redeployment option is that the funds must remain in the original NCE or new commercial enterprise or partnership throughout the sustainment period. USCIS generally considers 12 months to be a reasonable time frame to redeploy one's capital. And once these funds have been identified or redeployment options have been identified, they can be invested in any US-based investment, but have no requirement to be reinvested through the geography of the original regional center. Better said, qualifying US-based investments, which we'll talk on a little bit more in a second. One thing of note is that publicly traded investment vehicles such as index funds or ETFs or stocks or bonds are not acceptable. This is something that used to be the case. It used to be an option for redeployment investors because USCIS specifically said in their guidance that new issue municipal bonds were usable, and so that was an option that we provide for some of our pre-RI investors a bunch of years ago. But I think that kind of talking about this and maybe talking about these publicly traded options and how this is no longer an option, John, brings me to the first question for you, which is maybe you could talk to us a little bit about CanAm's redeployment platform, and more so how that redeployment platform has evolved over the years and gone from the many years ago when we were, I would say, probably the first to be redeploying funds for investors, and how we've approached today and how mature of a platform we have now created for our investors.
Sure. Thanks, Pete. So I think our first repayment that was subject to redeployment goes back to 2020. And it was a very large repayment, $350 million that was coming back to us. Ahead of that, this is aside from the short-term investments that you alluded to, Pete, but we spent a lot of time, really years before that, thinking about how we were going to approach redeployment. And really what we concluded is a few things. First of all, we wanted to be sure that we meet the investors' requirements for USCIS in terms of sustainment to make sure that they, meet their immigration requirements. Second of all, we wanted to be sure that, investors' capital would be preserved. Investors have gone through, undertaken a level of risk with a construction project in most cases. We wanted to make sure that, their capital investment was protected and that they get fully repaid at the end of the day. And third, we wanted to take just a level of fairness approach. I think our founding principles are always to do right by our investors and treat them fairly. So I think that really guided our platform, our core redeployment platform, which is a portfolio investment where we take each limited partnership that repays, we invest it into a series of different projects. We think that's very, very much appropriate. It gives a level of geographic diversification. We have, and then we have project and sponsor diversification, which we think is very important to spread the risk and protect investors. And then the third being fairness. I think just, these investors have spent, 5 or more years invested into an EB5 project where they weren't earning much of a return. Our approach is to pass through at least more than half of what's earned by any particular project through to the investors. So they'll be achieving a much higher, more, close to market rate return at an appropriate level of risk. So that's our general approach. And those are the key principles and guiding factors that we took to our redeployment.
Which is a great point. And the point of fairness in terms of rate of return, I think, is a big part, because a redeployment opportunity does not include any additional need for further job creation, right? The job creation from the project was completed in that original EB5 investment. And so what they are now tasked with is looking at having their funds maintained at risk and have a continuation of their investment to, again, meet those criteria of the EB5 program. Sorry, I didn't want to.
Yeah, I would just add that it's very nice. It gives us a lot more flexibility as we're out speaking to sponsors and developers across the country. We're not limited to a specific market or a specific geography. We're also not obligated to go into high unemployment areas or areas that might be depressed. We can pick the best markets and the best sponsors to really get the best quality projects. So that's our approach in looking for projects. And as always, as we do with EB5 projects, the original investments, we have a very stringent underwriting process. We have an investment committee review process, which brings in a lot of different talents. Within CanAm, we fully vet it just from an economic and credit perspective, but also from an EB5 compliance perspective. We have our in-house legal, we have our immigration counsel, and we also will bring in third parties as we need to. In some cases, that's third-party immigration counsel. In other cases, it's whether it's a valuation firm, to assess the market or a specific asset. So we have a whole process that we pursue to make sure that each investment is of the highest integrity.
Absolutely, and thank you for that. Matt, I was hoping to maybe hear a little bit more about that process. If you could talk to our clients about that and that due diligence process that goes on in our underwriting of these projects.
Yeah, absolutely. I think John did a good job of summarizing it, and I'll take it a little further in depth. Really, when we're looking at a project, of course for EB5, but also for redeployment, we're focusing on a few key aspects, both at the macro level and micro level. We're concerned about specific location, what the supply-demand picture looks like, employment statistics, rent growth, as well as a variety of other factors. And in our analysis, we're really looking to put together, a package and a project that delivers the best, risk-adjusted returns for our investors. Typically we can do that either through a construction project, refinance of an existing stabilized asset, and really everything in between. And recent projects include asset classes such as student housing, multifamily, industrial, and land. And those are really the asset classes in the current environment that we see are best suited for the headwinds that come. And in particular, it's not just those specific asset classes. We're really looking to target projects with strong sponsors who have shown, through their track record, their ability to both deliver and execute on, if it's construction, that ground up development. And if it's lease up, it's their ability, obviously, to get the project leased up and maintain operations at a stabilized basis to make sure that, you know, our loan is protected and secured. So I think, you know, between all those components, it's a very diligent process. There are various steps that we go through both internally and externally. We have several different levels of reporting that happen between when we first review a deal and when we actually approve it. And those involve, as John mentioned, both internal experts, where we have various different personnel from the company who are reviewing and providing input, as well as external parties from valuation services, brokers, and other, you know, industry and data experts that we're you know, collecting data from and using that to, you know, put together our package. So all in all, you know, it's a pretty stringent, diligent process, and our goal at the end of the day is, you know, to make sure that the investors are, you know, provided into multiple projects, a diversified pool of assets that, you know, have as little risk as possible and generate sufficient return for their needs.
Awesome. Thank you. And I agree. I mean, I think it's important to know how much goes into the selection for some of these, because oftentimes by the time we end up getting a chance to talk to a client about the pool or the investments that go into it, it almost seems as though this was just, you know, picked off the tree and this is the piece of fruit that was born. There is a lot of work. There's a lot of due diligence that goes into it, because we want to make sure that we take the most care possible in terms of dealing with our own, dealing with external groups to help to do due diligence where necessary, but also internally. You know, so, you know, EB-5 is an immigration linked security. And so we're always very cognizant of that component that goes in to make sure that we are handling not just the immigration side of it, but the investment and the security side of it as well. I mean, many people who we've spoken to and we've onboarded as initial clients would know that they're working through a broker dealer. CanAm Investor Services is the broker dealer that is handling their securities transaction in this. But we take that step further in the redeployment process as well to make sure that we have a SEC registered RIA firm involved as well, which is CanAm Capital Management, which is helping to make sure that we are finding investments that are suitable to investors from this immigration and investment standpoint. You know, because we're always going to make sure that the investments that we choose meet USCIS requirements. We're always going to have these very strict underwriting procedures that are in place, because the suitable investment for these investors is to maintain that immigration status, as well as to make sure that we protect the capital that is in place. John, maybe you could elaborate.
Yeah, just to add to that is, you know, part of our process does include, you know, CanAm Capital Partners is the entity, you know, under the CanAm, broader CanAm umbrella that is charged with going out and identifying projects and doing the diligence. You know, we then seek a recommendation from the RIA, you know, our in-house CanAm Capital CACM. So we do make sure that we're fully compliant across the board as we redeploy the funds and make these investments into the redeployment projects. So that's definitely another level of what we bring, and you know, the full compliance package is always part of the investment process as well.
Absolutely. So John, you know, we've talked a bunch about the sustainment period, and you know, for a pre-RA investor, that sustainment period is the 2 years of conditional permanent residency, you know, need to complete that time frame. For a post-RA investor, it is for 2 years of investment time frame. Now, if there's any changes to that, obviously we're only going to comply with that, and that's how we're always making sure that we are very cognizant of this and only choosing selections investments that are going to meet those USCIS criteria. But from a time frame standpoint, how long should an investor anticipate? How long are the investments typically that would be chosen for a redeployment option? Because there are two different timeframes, right? There's the sustainment period that needs to be completed, but there is also the time frame of the investment, and both need to be met. Right? And so maybe if you want to speak a little bit about that.
Sure. And investors will see that we have we have a disclosure package that they'll execute, and when they're ready to redeploy, this has a list, very detailed list of the investment parameters. And a big part of that, obviously, one of the biggest questions people have is, how long do I need to redeploy? So that's a function of where they are in the queue to get the requisite visas. We look at that. We look at that, for each limited partnership, and we really try to tailor, the redeployment requirements to meet the limited partnership requirements as well. So, I mean, some people, and it ranges. So we have, some people have very long redeployment timeframes and others have shorter. In some cases, if there's a huge disparity, we're able to create a customized product for some of the shorter term people. But by and large, it's these investors will go into our redeployment pool. The investment time horizon tends to be between 2 and 5 years, not longer than 5 years. And that lines up well with what opportunities we see in the marketplace. Generally, construction projects are typically a 2 to 3 year, investment cycle, depending on the location. And there's other projects that we can incorporate into the pool. So there might be staggered maturities within an investor's, the projects that each investor is invested into. And as projects come out of the portfolio, as they repay, if an investor's ready to, if they've met their sustainment requirements, then we'll repay that pro rata portion to them. And just as a point of reference, we're pretty proud of the portfolio we've built. We're now about $640 million that we've reinvested and redeployed. We've repaid about 100 million of that. The rest, continues to be invested, and those will be repaid as time wears on.
Awesome. Yeah, no, I appreciate it, because it is certainly a question that is in place, right? And I think it speaks to the type of project that we select, and the structure for our projects, because as many people, or the people who are listening to this would know, we structure our projects as loans, and loans have a specific time frame, and we work with companies that have a specific need for the funds that we are lending them. And so the timeframes of those, while ideally it would be great to be able to have a liquidation period right after people to complete their sustainment period. Unfortunately, it's not practical, because in certain projects, take the one that John alluded to, is a $350 million repayment. There were 700 limited partners in this project. Now, not all of them needed to have their funds redeployed. Many of them were eligible to have their funds repaid, but for those that did, they all had very different timeframes in terms of the completion of their sustainment. So what we do have to do is to work in the best interest of the entirety of the partnership. We can't necessarily have individualized redeployments for every single individual. But very importantly, as John had said, once you've invested into that portfolio, and once portions of that portfolio have matured, if you've completed your sustainment period, you are eligible to start receiving that pro rata share of your funds. So when you're looking at it, you are able to have your funds redeployed, getting a reasonable market rate for those funds and getting those distributions on a biannual basis. But you're also able to redeem your funds at the time frame that some of the investments in the portfolio come to, so you can get that pro rata share back. So again, there are a lot of moving parts, but there are a lot of great projects that we're able to choose because of this, and we want to make sure that people have the fairest access to their capital and the fairest returns that they're able to receive. And I think that this approach is really illuminated in that the success that we've been able to have in terms of the amount that's been redeployed, as well as the amount that's been able to be returned to investors, and the returns that people are generally.
Right, and the other thing is this redeployment approach has been validated in the sense that we've gotten permanent visa approvals with the USCIS. They've reviewed the initial project, that the job creation occurred, but then also that the sustainment requirements and redeployment requirements have been met. So the whole platform's been well vetted. and validated by the USCIS, which is another important component of course.
Absolutely. And important to note as well is because we're talking about this and we're talking about the redeployment and we're talking about your funds going to these projects. It's very important to note that none of this happens without your consent. These are all things when it is time and redeployment is a requirement for you, you will receive a very robust disclosure document that describes all of these things. You will receive a consent that you will return back to us should you decide to redeploy. There's no one forcing you to be, and there's certainly no movement of funds without consent that is being received by investors. Again, we want to make sure that we are being as fair as possible to everyone and making sure that we are continuing to immigration and investment requirements of this very intricate and detailed investment. So, in conclusion, Matt, John, I don't know if you guys have any final points that I think you'd like to pass along to our clients.
I would just add a couple things. First, after we make the initial investment, after the full diligence process, and we've decided to move ahead, we have a robust asset management platform where we track each project within the portfolio at a very detailed level. We report to investors on a regular basis, so investors will know exactly what projects their funds are in, at what point they're fully redeployed. And then you'll get periodic updates. Our investor relations team is outstanding, multilingual, depending on where you're coming from. They're always available to answer questions, address any concerns you might have, and really provide the highest level of service to our investors.
Great. Well, I hope that this is helpful for all of you who have joined. And like everything with CanAm, if there are further questions that you have after listening to us, please contact our team, ir@canamenterprises.com, or our redeploy team. We have a very robust team for all of these sorts of resources. John, Matt, thank you guys so much for your time. It's a pleasure as always getting to be with you guys. And thank you all for joining us as well as being clients. CanAm. We really appreciate you and all that you've done to make us what we are.
Thanks, Peter, and best of luck to everybody.
Yeah, thanks, Pete.
Great. Thank you.